Hello, crypto fans, and have we got some news for you, especially for you VeChain fans. VeChain is moving on to a new wallet. In fact, the old VeChainthor wallet may not be supported that much longer, maybe not even after the end of the year. What wallet do you need? Well, you need the vWorld wallet. And this actually has a lot of upgrades over the VeChainthor wallet. You can get it at vworld.net. Actually, I would suggest you get it from this page because you don't want to download a fake and get all your VT stolen from you. So that is the vWorld wallet, downloadable on iOS or Android. Now, what features does it have? Well, VeChain just recently got listed on Coinbase a few months back, and VeChain's recently launched wallet is integrating Coinbase Pay, so users can buy, sell, and receive VET directly in their wallet, so you will not have to go to Coinbase to actually buy VET. You can integrate it directly with a wallet and buy it directly from the wallet. I do think this is a very, very good development for those of you that didn't know, because, they also have the Learn stuff, which I covered a while ago, have two educational quizzes of each which users with pay users with $1 in VET if they can't answer each quiz question correctly. There's a couple of other options to earn up to $12 in VET. I do believe you can actually do that all with the wallet. I think it's the integration with Coinbase will bring it more liquidity, which will help it a lot in the bull run. Hopefully it brings it liquidity to the DeFi ecosystem as well, because VeChain needs a kind of a jolt in that DeFi ecosystem any way they can get a jolt. And of course, VeChain price has been rising with everything else, although not to the amount I'm sure some of you actually expect. But I wouldn't really worry about that. Once Bitcoin hits a certain price, I am sure it will go parabolic along with everything else. And I do expect us to get past 25 cents in this bull run, probably past 50 and hopefully to $1. That is still my goal for VET, although I would definitely think about selling after the all-time high, because at least at that point you are sure to make money. Kyberswap was hacked a while back, and now they're going to do something about it. No, they haven't found the culprit yet, and they're not going to destroy him with great vengeance. That comes later. I still think they should do that, but for now, they are going to announce treasury grants for hack victims. So if you are a hack victim, lost money, they will pay you back. And that really should be all that matters to you, that you don't lose your money. I know there might have been some possibility to trade in and out of some coins, but I don't think the movement in the last few days really gets people to buy and sell large amounts. So I don't think you lost too much during the time of that hack. You lost the time, but you're not going to lose the money. The grant is designed to ease the financial burden on affected individuals and will equal the USD equivalent of the assets lost in the security breach. So it is a little bit of trouble. Like, they'll just give you the USD equivalent of what you had on their swap. So you can go buy the coins again. Obviously, you won't be able to buy quite as much because, there's fees and all that, but you will be reimbursed 100% of the USD value on the swap, which is generally better than a lot of these, what happens after a lot of these security breaches. I do not think they will acquiesce with the hacker, and I don't think they're going to give them full control of Kyber network because, that would be kind of stupid, as we said before. And of course, it's a $48.8 million loss, so they will actually address this by establishing a grant initiative from its treasury to offer compensation to those adversely affected by the event. The grant is designed to ease the financial burden on affected individuals and will equal the USD equivalent of its assets lost in the security breach. This move highlights Kyberswap's dedication to its user community. Hopefully this can actually build some trust. I know it's going to impact their treasury, but keeping the trust of your customers in this case is probably much more important than just making sure your treasury's fat. Examinations into the security breach have unveiled that the weakness originated from the tick interval boundaries within Kyberswap's concentrated liquidity pools. The loophole enabled an attacker to manipulate liquidity artificially, resulting in a substantial depletion of funds. Of course, it was originally accessed at 47 million, but later it was verified to be 48.8, which is slightly more. And of course, Kyberswap did propose a 10% reward to the wrongdoer, but of course he did not accept because he wanted control over everything. They've actually recovered about 1/10 of the stolen funds, and they were taken by third-party MEV bots during the attack. But obviously that's not enough, and they're going to have to deplete their treasury. They have not found the culprit yet. I think they should go after him and destroy him with great vengeance. On a legal level, of course, fine him and throw him in jail to make sure no one else dares to attempt such a thing again. Coinbase actually has grown outside the United States. And this is not very surprising. They've actually had a lot of initiatives outside the United States to actually grow. Coinbase witnessed significant growth outside the United States, trading outside of U.S. trading hours, following cryptocurrency exchange Binance reaching a substantial multi-billion-dollar settlement with U.S. regulators last week. An on-chain data analytics firm reported a surge in Coinbase's market share. Obviously, Binance is the biggest one out there. If they're going to have some trouble and people are going to start to have doubts about Binance, Coinbase makes sense as like a backup place where these people can actually go. Coinbase, I've really not had any trouble with, using Coinbase for crypto-related stuff. So on November 21st, Binance and the U.S. Department of Justice reached a settlement of $4.3 billion, settling allegations relating to anti-money laundering. But it's not really that I think that's gotten people afraid. It's the other stuff popping up for Binance elsewhere, like the Philippines stuff, the Thailand stuff. They're seeing other jurisdictions maybe squeeze in on Binance a little bit, and some people are actually afraid, so they're ditching Binance for Coinbase. That is totally and utterly believable, and I know, and if I were the people that was on Binance, I might think about this as well if Coinbase was available in my jurisdiction. Of course, like when one big trading platform goes down, people are going to flood to other trading platforms because they want to keep trading. Bybit is the biggest winner out of this, but if you actually look at the change in BTC market share, you can see that there are a couple of big winners here. On this graph, Binance obviously went down. Bybit is way up. OKX, meh. Others, meh. Other US down. And Coinbase, way, way up. So Coinbase, definitely outside of US hours, has broadened its scope. And of course, that Coinbase stock, I do think that Coinbase stock is going up. So take that as you will. Coinbase stock did actually reach a multi-year high. It's not reached its all-time high, of course, but I do think it will actually pass its all-time high in this cycle. So still a very, very good buy on the stock market basis. On that note, Binance VIPs knew well ahead of time what the settlement was going to be, otherwise known as the Fat Cats. So at an exclusive dinner in Singapore, certain Binance executives reportedly told traders about the pending settlement with U.S. officials, allowing the exchange to stay in business. So the Fat Cats knew well before time. I think that's one of the reasons why BNB didn't fall off a cliff, obviously, because they were braced for this and they were already ready and they kind of expected this. And of course, the Fat Cats had a lot of BNB to sell, so they weren't really all that nervous about it. So they already knew about the $4.3 billion settlement with the United States. CZ was not in attendance at the event, but Richard Tang, the current CEO who succeeded CZ, was mingling with the guests. So they already had the plan, obviously, with Tang to actually take over. He was mingling with the high rollers. And of course, the high rollers seem to have actually maintained their faith in Binance. They don't seem to have pulled out of Binance. So according to Tang's post on X, the then head of regional markets was in Singapore for the Token 2049 conference. It was during a conference that he met these people. The Milken Institute Asia Summit, the Singapore Grand Prix for Formula One, and plenty of side events. And the side event was obviously him actually speaking to these fat cats and telling them what's going on with Binance. They knew ahead of time, but it didn't really offer them really that much advantage because BNB didn't really go down during the settlement. It went down a little bit, but not all that much. So there wasn't really that much to gain in terms of longing or shorting. And overall, Binance looks like it's going to survive just fine. Tether is moving into infrastructure and energy production. This is not something I actually expected, but it makes sense that Tether would want to move into other markets as well. They will build renewable energy facilities in Uruguay and El Salvador. So they're on with the ESG model. And I think that will actually make them look better in international eyes. Maybe the IMF will not come after them as hard, although I think the IMF still will. So the CEO of Tether, he just became Tether on December 1st, from the position of CTO. He's been there since 2017, and this was well planned in advance as the company is prioritizing diversification and expansion. Obviously, they want to expand Tether, but they also want to be in on the ESG stuff. So I guess they're doing kind of like renewable stuff and energy conservation stuff. Tether is on track to make 4.5 billion in profits with its main business this year. So if you guys are wondering if Tether has the reserves or not, they do. I mean, in a bear market, they made $4.5 billion in profit. Imagine what they make in a bull market, 10 times that. They can easily fill up their coffers within a year or two. So I do believe Tether is fully backed. So as we're going to show in the next quarter, Tether is much more than USDT. For one thing, Tether will increasingly become an infrastructure provider. So if they actually get these things in place, it will be harder for someone to actually take them down, and there will be a far more consequences if they're taken down. So authorities would actually have to be careful. There's some talk about real world assets, but I think is more important is a real world ecosystem. So they're going to build an ecosystem around Tether using like whatever, like WhatsApp and other stuff. And I think they're looking for like tokenization with Tether as well. I'm not exactly sure what form that's going to take, but a lot of interesting stuff happening with Tether. So I'm pretty confident that USDT is not going to go away anytime soon, and you shouldn't expect it to. I still like USDC slightly better, but USDT does not have me worried at all. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you, and have a nice day.